We'll have Jeffrey Gundlach, of course, of Double Line, as we always do, exclusively coming up in just a moment. In the meantime, let's bring in Josh Brown of Ritholtz Wealth Management. He's also a CNBC contributor here with us on set. Nice move in stocks. Yeah. Nice drop in yields. You think that's on the idea that they're done?
Yeah, I think the reaction in stocks started off as muted. There's actually only one sector that's in the red right now. Outperforming sectors are a little bit of a mixed bag. I can't really tell a great story about this. Maybe Santoli can come up with it. Tech, utilities, communications, all up more than 1%. I think a lot of what we're seeing here, though, is just the fact that there is no new news. Art Cashin had a note out relatively quickly once we all saw the statement. He mentions the fact that even the periods and the commas are in the same place. There's not a lot here, and in the absence of not a lot, markets can rally. It's one less thing that we have to worry about, and I think that that was really key. Last thing I would mention, all of the action, the meaningful action, let's say, is in the belly of the curve. The 2, the 3, the 5, and 7-year Treasury all have down double digits, but when you look at the short end, it's flat. You look at the long end, it's flat. I thought that was maybe somewhat notable. What's the reason behind that? I asked my research team. They said positioning and hung up on me.
Yeah, the 10-year note yield, just look at it at 477. That really came down today with the Treasury refunding announcement. Some of the economic data was weaker. We'll ask the legendary bond investor Jeffrey Gundlach about all of that. He does join us right now exclusively to react, the CEO, CIO, co-founder of Double Line Capital. Jeffrey, it's a pleasure to have you here on Fed Day, as always.
Yes, Judge, good to be back for Fed Day. Not a lot of, Josh is right, not a lot of news today. Is almost a direct repeat of the last meeting. You know, carefully, he said that very early on and repeated it. I think the market likes carefully. So stocks rallying, bonds obviously rallying too. We're down now about 25 basis points. But also, you know, he said they're not even talking about cutting interest rates. They're not even having a discussion about it. And yet at the same time, he's not confident that they're sufficiently restrictive. So the door was left pretty much wide open for future flexibility at meetings. And, you know, the yield curve is completely flat. So it's kind of in the same mode, I think, that the Fed's tone was, that Jay Powell's tone was. And that's a reason why you can rally after this brutal sell-off in long rates over the past 2-3 months.